Hey guys, good morning. It's Saturday, a little afternoon on September 19, 2020. Wanted to kind of go over some of the stocks that we've been trading last week that have been really doing well. I want to show you a textbook uh, technical pattern on a stock that is just textbook inside and out. And it's one that everybody knows, a familiar name, one that's been really doing well, and one that we've talked about not panicking out of. And it's a bit of a longer term hold, kind of a cultural change stock. So get into that in a few minutes and kind of look at where the S&P 500 is at and how kind of was a weird day on Friday, how you saw a lot of the big tech stocks, the mainstays, the Microsofts and Apples and things like that, like Facebook, were weak, but you had some of the more bubbly momentum stocks like Zoom and Peloton and stuff like that continue to surge higher, having great days actually. And how I think that this really isn't a huge, the start of a huge sell-off here, a bigger sell-off. Talk about the VIX too. I was saying that, when we were up at the 30s, 31, 32, or whatever we got to recently in UVXY, that it was just basically hedging for an expected pullback in the market, which we got. And you could actually see the VIX start to pull back as the market continued lower, which kind of tells me that any traders that were using the volatility as a hedge for the market sell-off were kind of cashing in their insurance checks, and that they did not expect this to be a bigger decline than what we've seen here. Maybe a couple more days of shakeout and then some sideways consolidation. I'll look at some channels too really quick and some stocks that I like. But starting with the S&P 500 here, definitely every time we've been able to extend past the upper channel line, we've had significant pullbacks when we get to that stretch and we pull back sharp, stretch, and then pull back sharp. Definitely looks like we could definitely go lower here just based on the increasing in volume that we've seen as the sell-off continues in the S&P 500. And then you see the relative strength start to break down a little bit, and you have a little bit of extension in the MACD with expansion. So what I'm expecting to happen is maybe a little bit further downside, or there is one possibility, but it would have to happen very early next week, is literally you get a sharp rebound right away and get you back above the 50-day moving average, which we've broken for the first time on the simple moving average, probably the exponential as well, but the simple moving average did break for the first time since kind of the beginning of this rally. Once we got past this little area in here, we never really broke it. A little bit of a touch there, and then you can see us finally breaking it in this little time frame right here on Friday on a little bit higher volume than we've seen, and that's not a great sign, but it's not a sign when I look across the board and I see a lot of stocks moving to the upside and the Russell 2000 showing some stability. It tells me that this is not the beginning of something more ominous. In fact, a big sell-off probably would not have had this type of action that's kind of more subtle. You'd probably have a sharper continuation move, and the volume would have been higher too, because when you look at it back in this time frame when the COVID sell-off was happening, we're not anywhere near that. So if we look at channel lines, and I can go back to the bigger view here, the broader view on the S&P, you see that we did break a few channel lines, but as you get higher in the market, it's harder to continue the same angle on channel lines. And we've talked about this before, that when we look at the first channel line that I'm going to show you here, you can see that the trajectory over time kind of changes. So you can see I want to go for the first area. I don't want to check the bottom of the channel in here from the very first bounce. I want to look and get this, I guess you'd say, second bounce here. Here's your first bounce, and then pull back. And this tells me that this continuation move to the downside was negated because the bounce up here would have followed with a further low. So this is a very important level right here. This is the first area where traders felt it was comfortable that the sell-off was over. And this area here is not really where I want to start my channel. There are channels from there, and a lot of guys have drawn them and said along the way that we broke with this narrowing upside and that we were going to fail. And those were the arguments that I made, that really we hadn't. We just changed their direction a little bit of trajectory, more sideways, which is more conducive for a longer term rally. You don't want to constantly see these sharp moves up that are unsustainable. So you can see the channel that we've had here, the yellow line extended above, then you get the sharp pullback, and we never really closed significantly below that channel. We've kind of waffled through along, and then recently we had the break below. So we know that we gave up that line there, and that line's going to be tough. That's more of a momentum line. And then you can also see the second line, that's a little bit more of a sideways trajectory, right? The light blue line. And if you kind of zoom in this area here, it kind of captures this area as well. And then we back tested it a few times up in here, and you can see, if I can kind of pull that down, that we've kind of failed at lat line 2 times, which we did make a higher high within this time frame, but that one's failing as well. So there's no doubt about it, we've broken some trend lines, but what I think is going to happen is we're just constantly turning sideways here, and it's not anything negative at all. It's more of, you know, what the market is doing right here as far as absorbing a lot of the movements that we've seen. So if I remove this trend line, I'll show you the line that I think we're going to follow here. So let's remove that drawing. So maybe I'll change the color on this to a yellow so you can kind of look at it a little bit better. But this is the line I kind of expect us to follow, and you can see why. Once again, here's this big move up, and we stop, we get the gap and the island reversal, and then you fill the gap and you back test that line. So I kind of think that's important. We only have one opening below it, then you get back up and then retest the line in that area, and then you have one close below. We always say time under doesn't really hold. You go back up, and you have a little bit of agitation, and then you hit it twice, and then you push through, back test it. So I kind of like the accuracy of this channel line. And what did we do here? We failed. We back tested it. We went through it a few times, but we opened right on it, and we couldn't close above it. The bottom line, same thing. This is an area where we kind of pulled back from this original bounce. We pulled back up, and then where do they back test? Right along the line before this huge move up. So I like this up, and then where do I feel safe holding this for the bigger move? And where do I feel safe that this move up is not going to get rejected and come back down? Right here. So you see the touches along here. So I kind of think we're going to pull back a little bit in here and start a new channel with this trajectory to the upside, which will kind of fake out a lot of the shorts. They're going to think that, oh my God, we're breaking here. We broke the 50-day moving average. If we do not hold this line here, then I think the 200-day moving average is game on, which is quite a bit lower, but I don't see that, especially when I look at some of the stocks like Zoom and some of these other, we look at the IWM, the Russell 2000. The Russell 2000 was actually holding up pretty well. I mean, look at this move in the Russell here, and I don't want to throw too many lines out there. I didn't realize that does lines up there, but same thing with the Russell. And look at the Russell, not even breaking trend. Russell's had not the momentum, but look at this channel line on the yellow side here. We barely got up to the, here's the extension, big pullback here, but yeah, I mean, the Russell looks good here. Hardly even moving. In fact, it hasn't even broken below this recent move here, which is pretty cool, right? Pretty amazing. Then once we remove these lines, you're going to see, we'll just clean this up. And the Russell has been the laggard in this momentum and this move to the upside. But now the Russell, since it hasn't had those crazy moves, was able to hold its 50-day simple moving average. Look at this. You know, holding here from the big move, right? Holding here, holding here, holding here. And believe it or not, there's only been one day where it closed under, and then it got right back up with some energy and kind of went sideways here. So I don't expect this buy. I think this buy just is heavily weighted with some stocks that got overdone, like Microsoft, you know, et cetera, et cetera. We get the game. So I think this is kind of more like this kind of move you're going to see here, where we overextend, you pull back, you have this little H pattern, and then you grind higher. Overextend, you pull back, you have this little H pattern. Although this low here is lower than this prior low here in this H pattern. As you can see, the horseshoe is lower here, which means we might still have further to go, a little bit more shakeout. And I think it's going to kind of line up with this channel here, which would put us around 326 when we could zoom in there. Obviously, I changed this to intraday. It's, depending on how accurate it is, we're going to see some lows in there too. But we haven't broken through the negative side of the MACD, although the trajectory is pretty sharp to the downside. The only thing that could negate that would be a sharp move up right back above the 50 on Monday, which is anything's possible, right? We could have a big down day on Monday, but I'm just telling you what my opinion is. You know, that can change, and I'll adjust my thought process if the market tells me something different. So the stock that I want to talk about is DraftKings. DraftKings has been and we talked about this one forever. We talked about this when it was in the 30s. A lot of guys were panicking out. You know, we liked it up in here, and they're like, "Oh my God, is it done?" And looks like we're coming down again. Nothing. We just kind of formed into a triangular wedge pattern, and then we had a bullish breakout from that pattern. But this has really been a textbook stock, and I'll show you why this has been such a textbook stock. And I still, like we said, we think this is going to the 56s. We're getting really close. We came super close on Friday to this upper channel, which I think could get penetrated even and then pull back a little bit. Even though I love the company, I might take a little short position there because we are doing this little thing, moving a little bit higher on declining volume. A little bit of a concern, but a lot of times that could just be lack of sellers. So what I'm saying about this being technically a perfect stock is you'll see that in the volume. And we look back at the original, you can see this first move up that we had and then this sharp pullback. Here you go. First move up, sharp pullback. And you have a giant volume spike here with very little movement, right? Here's your giant volume spike, which was done on June 18th. Look how high the volume was there. It blows out and dwarfs all the volume around it. And in that day, you barely had any move. That's distribution. So hardly any movement with massive volume. That's distribution, which means the next move is probably your continuation move. And what do you have? Sell-off. All these days, look at that. You go from a 42 down to 27. That is a big move. But what happens the next few days in the sell-off? Declining volume, declining volume. 3 days of successive declining volume. This is a buyer's strike here. That means everybody's just pulling their bids. It's not panic selling by any stretch of the imagination until you get to the trend line break here. Then what do you have? At the trend line break, 3 days of successively higher volume from the trough. 1, 2, 3. Successively higher volume days. But then what do? You come back down and you touch the channel line. And then what do you have? A little bit of a high volume pop, expansion. And then when do you have your sell-off? Once again, right at the upper channel descending line. Can't get through. They sell it back off again. Pulls back down, retouches the lower channel. Now you break through the wedge of the upside. You back test it a few times, and then it's off to the races. You never get the 20-50 crossover, right? Right in here you touch, and it's a little bit of a touch and go. Perfect textbook on the MACD, right? Crossover in here, right where the wedge starts, right in here to the upside. Touch and go, expansion, boom. Probably have a little bit more room to the upside, which kind of coincides with what we're expecting the RSI to get to. Another overbought condition, and the upper channel line in the 56s and 57s that we talked about days ago in our text alert service, whatever we talk about. So that's textbook, beautiful move. They're buying the dips continuously on DraftKings, but we got to start being a little cautious here and bleeding some off if you're still a holder here, because we could still have the same type of move, right? Big move up, pull back, curl, consolidation. Big move up, pull back, curl, consolidation. You know, we don't want to just be bag holders up here thinking this is going to go to the moon. We are getting a little bit overbought, like I said, on the RSI. So a couple stocks in the news, not in the news, but stuff that we follow and have been talking about forever that did unbelievable recently. Tesla, we had a nice trade. I bought it 317 and change, 314 averaged in and sold it. I got it on pre-market. I think it was 339, 342, whatever. Nice 25, 30 points for us. Beautiful move there. We've talked about a killer stock recently that I kept saying something's going on here, and this looks like a strong one. And the ticker symbol is LMPX. I said they're building an automotive conglomerate here. Ever since the earnings release, this thing has been on fire. One of our stocks that we like. And look at it. This has been on a tear. Here's the earnings report. Big volume. $9 a share. And we kept saying something's going on here. And look at this move. Pull back. Little bits of shakeouts in here, right? Even shook some people out in here probably. But this thing just keeps firing to the upside. Unbelievable move here in LMPX. You have basically a triple from the bottom here. Almost a quadruple. You have more than a triple and almost a quadruple from the bottom. But another beautiful textbook move, breaking the 20, back 200 day moving, back testing it, touching the 20, moving up, expansion, and big pop on Friday there. Getting a little overbought. In fact, we filled the gap on the 1 year, I believe, and then some. So this has been a monster trade. You did fill the gap in here. Gaps tend to get filled, which would later on be your resistance area and then support. And then we just popped above that. We kept pushing it, filled the gap, and then popped through it on big volume. So I'm not saying you go out and chase this, but, you know, we've been talking about this one for a while. So it's the same thing with JNCE. Said something's going on here. Look at this move. Especially from the big gap. Big gap up. And yeah, I use these little Mickey Mouse bar charts, but I like them for clarity. Big gap up. Is this a pump and dump? Nope. Sorry, going higher. Boom. This thing looks incredible too. I'm not saying this might be done because of the big volume on the upper day, on the high day, and then pull back there. Well, we can take a closer look at that, but you're getting a little bit of a roll in the MACD there. DPHC, one that we liked. I don't own it. As far as the SPACs are concerned, this was one that we liked. Not we liked that many of them. A little doji there, so that could be a little suspect. SPAQ has been okay. Not as good as the other ones though, but and KCAC is one that we like, but it kind of needs to show a little more strength here. This one's been strong too, and once again you get another curl back up. We'll see if that one's done as well though. Another reversal doji on the top. But as far as the one that we talked about recently too, QDEL, I told the other day to subscribers that there's nothing wrong with buying some here in the 150s, 160s. I think this as a longer term play looks fantastic. And then what do you get? Huge move. I think we were up, what, 18 points? 18-point move on Friday. Look at this. 18-point move. This is a shakeout here. This is a complete shakeout. And when you see shakeouts like that, and then you go back up and break, that is so bullish. Look at that. Big gap down. Probably going to fill the gap. I'm not saying chase it because we've been talking about this at the 160s, 159 for subscribers. But yeah, I said this one looks like an interesting nibble long-term hold. Wasn't sure which way I was going to go here, so I took a small position because we got into this little wedge pattern in here. Hopefully you guys can see that. And this was the day we talked about it. I wasn't sure whether this was going to be a false break and then kind of maybe consolidate some more. So I only took a half a position, thinking that maybe we have one more day down where we come back into the mid 150s and then pushes higher. So I'm stuck with a half position, but it is what it is. And that looks really nice there on QDEL. One that I'm kind of not doing so well on is Lyft, but I'm still constructive on it. A little bit of a false breakout on Lyft. Still holding the moving averages. If we stretch this out, you can see the 50 above the 20. I'd like to see the 20 get back above the 50 and get the crossover. Here's the crossover to the downside, which is a red flag. Here's a prior crossover to the upside, short-term above mid-term moving average. Nice move, boom, up to the 200. I don't think this is done yet, and maybe we can kind of do some of the channel lines that we draw, proprietary stuff that we talk about, funky technicals. Back above there, hopefully we keep above this 29.70 on the close. But I still think this looks constructive, just not as positive on that one. Triple M, I've been liking the chart on that one as well. Had a little bit of a false breakout to the upside along this little topping area here, and we came back down and kind of closed under it. A little too early to go for Triple M, but I do still think it looks good. Triple witching on Friday, so who knows what the hell is going on, but the volume is a little bit higher than I wanted to see on the pullback back below the line. So head fake there, no continuation move. That's why a lot of the traders bailed out of it because it couldn't get a fall third day, and you got a reversal. So maybe a little bit more of some consolidation ahead for Triple M, and we can look for a pullback and maybe to the mid 160s before we get a continuation move to the upside. Another one that had a monster day that we were trading and talking about was Sava, S-A-V-A. Another one that we talked about in the last few days, subscribers, that this move might not be done. Look at this move, and then boom, explode to the upside, up 42%. And then intraday, I gave out an alert not to get shaken out when we were at 950 or whatever we were at. I said target price would be 1020 on this one. I believe this is one that I talked about. It might have been another one. I'll look at my notes and see. But nice move on SAVA where the 10 area was big time resistance and it got above that. Kodak, I've missed trades on that. I actually had a bad story about Kodak. I actually had a couple thousand shares and literally got stopped out by pennies, and then they ran the thing into the 11s, and I was in the 9s, which is a little bit disappointing. So that thing had a hell of a move on Friday, but I'm not one to chase that one. I don't like it fundamentally, so I'm not going to play that game. Snow, I've been watching, and of course I take my eye off the ball as we go into the close, and I'm doing something else, and has this monster break out of this bull pennant, and here, this wedge. Let's get rid of some of this crap here. And we'll remove that, get it out of the way. Actually, I could get the whole thing out of the way, but you can kind of see how you have these little channels like in here, and the little overbought areas they sell above the channels. And then I'm going to show you another IPO that I liked from Friday that we're going to definitely have to be watching. So these little spikes above, they sell into it. Here's the thing with these early IPOs is that a lot of guys got in snow in the, who knows, 70s, 80s, as this was a non-public company and their original investors that own shares of it much lower. It doesn't mean that they're buying it at 240. They own shares maybe 40, 50, 60, $100 when the company was initially finding, investors to invest in the company. I know the company's great, but the valuation's ridiculous. And then you can see that, what happens is these guys have already doubled, tripled, quadrupled their money, and they pay somebody to sell into strength or figure out a technical advisor of where they think they should get out of their shares because they want to sell some and then, play with the house's money. So you see these big moves up and you're like, who is selling this? Why are they selling Snow? Because they're selling into strength, but then there's other guys that want to buy into weakness, and you can see that, they have these little channel lines drawn where they think it looks interesting to buy into. This was just a simple trading day on Friday, and I probably would have caught this little wedge in here, and then it popped. I probably would have bought it there, and I'd say, "Oh boy, did I get head faked out?" But I probably would have put the stop somewhere along the intermediate channel line here. This would be your intermediate channel line where you test, fail, and then boom, it goes back up. I probably would have put my stop around 235. And then you get a nice move up there. I just missed this. I only have 3 screens. I can only watch so much stuff. But what I'm going to start doing is putting alerts for everything out during the trading day. I'll just be super busy putting, hey, if this breaks 237, send me an alert, and then I can kind of look at the shape change. The one that I did like is you. I think this is a fantastic company. This is the IPO that I went in and out of it. I just watched it for the very first part. Then I got 500 shares at 68.80. And I sold into this spike here. Then it came back down again. I kept bleeding off shares. But yeah, we did get a little bit of a shape change, but I wasn't convinced. And you can kind of see that this really is non-directional. From the get-go, they sold into it, right? If you got into this IPO and you had shares at $30, $40, these guys just doubled their money. So what are they going to do if they're going to sell? But that doesn't mean we just capitulate here and go down and break 67. What's happening is, as they continue to sell off and more of these guys liquidate their positions, there's going to be less selling because they want to get out. Eventually, there's nobody left to sell. They're pretty much done selling into strength, unless we get some monster to the upside. Now the people that want to buy it are waiting to figure out where is the bottom, and you can kind of see you had a little bit of a channel line here at the bottom, and then you kind of broke it later on into the close, which means people were thinking, okay, I'm not going to get any type of a move late. I'm just going to dump my shares. I don't know what's going to happen Monday. It doesn't mean we're done yet because you could have a little bit of a wash out, and any traders that are sharp traders know that if this thing breaks 67 on Monday, you could have a lot of people dumping their shares that had stopped in at 67, and if they're looking to buy because they think this thing's going to be a bigger move or longer term, they're going to buy those things at 65, 64, 63. So we're going to try to figure out where we take a nibble in here. Like I said, it was very hard to determine that this thing was going to get going at all on Monday and make a nice curl and then break through the high, or what it was going to do. But I don't think you is done by any stretch of the imagination. I think this is a really interesting company. And I'm going to close up with Facebook, which I think is going to have a move soon. I wasn't interested in Facebook, but now I'm kind of getting interested in Facebook. And here's my channel lines longer term on Facebook. And I think we're going to back test this channel line. Hopefully, we might just stop here. But if the SPY does what I expect it to do, we should be able to pull back a little bit more. You're getting a break into the negative side on Facebook. Your RSI and your daily is getting close to oversold. I have a lot of heavy selling. I don't know if it's because of triple witching, but there's been some news about Facebook recently and some internal, I don't know, this, that, and the other thing about how social media and restrictions and regulations, et cetera, But I do think this thing is interesting now after we pulled back 50 some odd points. So this might be on our watch list for a red to green on Monday or Tuesday. So that's been a nice mover there as well. And I think that's about it for right now. Rocket Mortgage is trying to put in a little bit of a bottom here. Not my favorite fundamentally, but I know it's a meme stock kind of name. And we talked about W lately being strong. For some reason, it's been resilient. And man, another monster move. You can't have market sell-offs when you see moves like this in W. And you can see the wedge break on Friday. Pretty impressive moves in that and Peloton, which I thought was probably going to run into some major resistance around 88 and take some time to get back through there. Nope. One day and it was back up to like 89. So interesting moves there. I do not expect us to have a big sell-off on Monday, but if we do, we can adjust. And to me, it's going to be a buying opportunity. I just kind of have to go with what the market's given me recently, and it's certainly given me a bullish, outlook. Even though we've had this pullback recently, when I see stocks like these Zoom and stuff, those stocks would come down precipitously if the market was going to have a continuation move to the downside. So that's my thought process here. I'm sure there's something that I missed, but we can go back over that later, and we'll go from there.